Welcome to Swadesi Startup Speaks, your weekly dose of India's startup scene. This week we cover India's PEVC investment surge, AI-focused funds, UPI's expansion to Qatar, and why unicorn founders are reducing their stakes, plus a deep dive into early-stage funding trends and India's growing AI ecosystem. Let's get started. India's PEVC investments in startups surged to $1.1 billion in Jan-Feb 2025, up from $594 million in 2024, driven by growth stage companies and mature startups. VC funding alone rose 69.7% YoY to $883.2 million in January, with deal volume increasing by 40.9% to 131 deals. India accounted for 9.9% of global VC deals and 3.6% by value. From Jan-Nov 2024, VC funding reached $16.77 billion across 888 deals, marking a 14.1% rise in value and 21.8% in deal count YoY. This growth reflects strong investor confidence, keeping India among the top 5 VC markets globally. Indian startups raised $1.65 billion in February 2025 at a median valuation of $83.2 million, bringing FY25 upper Feb funding to $25.4 billion across 2,200 rounds. This marks a 19.5% increase from January's $1.38 billion, but a YoY decline from $2.06 billion in February 2024. Bengaluru led with $353 million in funding, while Mumbai saw $102 million with a higher median round size of $5 million. Fintech firm Oxezo raised $1 billion in debt, followed by Udan's $75 million Series G. February also saw key acquisitions, including Head Digital Works buying Delta Tech Gaming for Rs 491 crore. There were 16 IPOs with a $26.5 million median market cap. India's 2024 startup funding totaled $30.4 billion, down 6.5% from 2023. India's UPI is set for full rollout in Qatar after successful integration with Qatar National Bank systems. In July 2024, Indian Ambassador Vipul confirmed at the Web Summit Qatar. This will simplify transactions for the Indian diaspora and boost fintech ties. India-Qatar startup collaborations are also strengthening, with Qatar offering funding and an innovation ecosystem for Indian startups. Following Qatar's emir's visit to India in February, Qatar committed $10 billion in investments across sectors like fintech, infrastructure, and space. Currently, Qatar has $1.5 billion in FDI in India. Talent mobility is also a focus, with 800K Indians in Qatar and growing institutional ties. The Qatar Research Development and Innovation Center is already supporting Indian startups in oil and gas and health tech. Indian unicorn founders have significantly reduced their stakes, with median ownership dropping from 24.6% in 2018 to 13% in 2024 per Traxon data on 102 unicorns. This decline is driven by a tough funding climate, forcing founders to dilute shares to secure capital. The ongoing funding winter has pushed startups to focus on unit economics and cash flow management. Experts view this as a sign of a maturing ecosystem where founders prioritize growth over ownership. Some also see it as a strategic move to ease regulatory scrutiny before IPOs. Despite this trend, a few founders still retain majority control, and ownership dilution is expected to stabilize as funding conditions improve. Investor Aviral Bhatnagar's AJVC, a junior VC, has closed its inaugural INR 100 crore fund to support pre-seed startups in India, focusing on AI SaaS and consumer tech. The fund, oversubscribed beyond its target, has already invested in 9 startups and plans 15 investments annually. AJVC aims to fill India's early-stage funding gap, especially for first-time AI founders. The rise of micro VCs like AJVC is addressing the decline in sub-$1 million seed rounds, providing not just capital but also technical mentorship and go-to-market support. AJVC may exercise a green shoe option to expand further. India's Together Fund is targeting $150 million for AI startups by 2025. Since its inception, the fund has made 31 investments across its two funds, focusing on AI-driven innovation. This initiative aligns with the growing demand for AI investments in India's startup ecosystem. The fund aims to support early-stage AI companies, providing not just capital but also strategic guidance. Together, fund's expansion reflects the increasing investor confidence in India's AI sector, helping bridge the funding gap for emerging deep tech startups. Indian startups can develop advanced AI solutions by leveraging open source models rather than building foundational models from scratch. Experts believe DeepSeek's success proves that breakthrough AI innovation is possible without massive funding. While India is late to AI innovation, VC and PE funds are actively seeking startups with cost effective AI solutions. Some Indian startups like Ola-backed Crutrim and Ace Cloud have begun hosting DeepSeek's AI models on domestic servers, addressing data privacy concerns. This move ensures Indian data remains in the country while offering AI solutions at competitive prices. That's a wrap on this week's Swadesi Startup Speaks. India's startup ecosystem is evolving fast from AI breakthroughs to global fintech expansion. Stay tuned for more insights and don't forget to subscribe for your weekly startup deep dive. Until next time, keep innovating.